Like and subscribe to my channel and click the bell icon to get new video updates.
Analysis. Darktraces Mba case study in fiduciary and accounting. U.S. hedge fund Quintessential Capital Management recently asked questions about the Cambridge-based cybersecurity firm accounts and said it was short. Imagine you're a fund manager considering stocks for your portfolio. If you don't buy and Darktrace doubles in value tomorrow, no one will criticize you for being cautious and missing out. But if you do and the stock slide, good luck explaining. The short seller broadside touches on three main issues. Investors in software companies will be familiar with the role of intermediaries known as value-added resellers, the need for a clear distinction between selling software and the hardware it runs on, and the exact date on which revenue is posted are used to justify this, essentially preferring hoped-for revenues. There is no contradiction. According to Darktrace, these contracts were excluded from the IPO deal. Processes have been strengthened where possible and are robust and enforced, it adds. In terms of revenue recognition, Quintessential is puzzled that Darktrace's long-term deferred revenue has declined as a percentage of total revenue. Most revenue in a long-term software contract cannot be booked immediately. Instead, it creates a balance sheet liability, deferred revenue that represents the promise to serve the customer going forward. The hedge fund suspects that Darktrace booked some of that early as earned income. The former chief financial officer of Autonomys was later convicted of fraud in the United States. A judge in a civil case brought by HP in London concluded that founder Mike Lynch had dishonestly enticed HP into the acquisition. The board needs to deal with this. Having a CFO who was externally appointed just prior to the IPO certainly helps. But investors would certainly welcome further distancing from Autonomys. Stifel analysts propose replacing parts of management and middle management, adding more independent board members, and appointing a new chairman.